Hello, and welcome back to the Fintech Takes podcast. Today I have a very special episode for you. A longtime fintech friend and prior Fintech Takes guest, Matthew Goldman, founder and managing member of Totavi, and the author of one of my all-time favorite fintech newsletters, Cards for the Win, Cards FTW, which, as the name suggests, is all about the payment card space. We talk about Chase and the changes that they're making to the Chase Sapphire Preferred Card, which is their flagship product in the premium credit card space. We also talk about new market entrants. We get into Bilt, which is just a fascinating company that I've been writing about a lot recently. And then finally, because apparently every podcast and every newsletter has to touch on crypto these days, given its ascendancy, we talk a little bit about the collision of crypto and credit cards. Coinbase recently announced a new card. That card offers some pretty fascinating features. It's also being brought to market through a partnership with Cardless, so Cardless on fire right now. We talk about what that card looks like, what some of the changes are that might mean for the broader market, and really, is it attractive to get 4% back in Bitcoin rather than in cash or gift cards or miles? So we talk about all of that. We make some wagers in the podcast. It really was a fun episode. I'm planning to have Matthew back again in the future. And if you listen to this episode, you'll find out why. So without further ado, here is Matthew Goldman. Matthew Goldman, welcome back to the podcast.
Thank you. I'm so glad to be here.
When we were together last time in Vegas at Money 2020, it was like the second or third day. And I'll be honest, I only vaguely remember that conversation anyway. So probably kind of the same vibe in a way.
It was pretty early in the morning for the third day in Vegas. So this is a nice relaxed version.
Yes, yeah, but hopefully I've had more caffeine, I think, at this point, so my brain should work a little bit better. As I said in my intro, you are the author of one of my favorite newsletters on anything in the space, partially because you're just you're a generalist on fintech stuff, but you're also like a super deep nerd on card stuff specifically. And it's been a while since I have really done call it a survey of what's happening in the card space. And so I thought it would be fun to have you come on and we can just bounce across a few different topics that have caught my eye on. I know ones that you've written about, and we'll just see how many we can get through over the next 50 minutes or so. Does that sound okay?
Sounds amazing.
All right, let's go ahead and do it. So the first one I wanted to ask you about, and it's probably the most in the middle of your wheelhouse, I feel like in some ways, is Chase, the entity which we always end up talking about in every banking and fintech podcast because they sort of sit at the center of the universe like a giant black hole. They recently announced some fairly significant changes to their flagship Sapphire Reserve card, the card of the wealthy millennial, so to speak. And I guess on one level, I wasn't shocked to see that they were making changes to the card, just given kind of changing dynamics in the space. But I'm wondering if you can give us a little bit of an overview, because I know you wrote about this in some depth in your newsletter. What's changing? And then I think more importantly, what does this change signal for the premium credit card space? Because I would say, if anything, it's become even more competitive since they launched Sapphire Reserve. I can't even remember when that was, Matthew.
Yeah, I think it was 2016 when they launched Sapphire Reserve.
Like ancient history at this point.
I know. I was chief product officer at Bankrate credit cards, creditcards.com, the points guy at that time. It was such a huge launch. There's always this funny thing they would say, we didn't have to spend any money on marketing. I'm like, well, look at the Bankrate P&L. I think they paid us maybe $5 or $10 million or something in affiliate fees.
Wow.
It was so significant for Bankrate that on our next quarterly earnings call, our CFO was like, please do not use this quarter to project next year's this quarter because there were abnormal events that occurred. I think Chase is wonderful at the things they do, right? There's a reason they're the number one bank in the country, and it's not just because they bought all the other banks, but it's also because they're amazing executors. And they hired this, very experienced team, many from Amex, to build out Sapphire and take on this part of the market. And it's been hugely successful, almost to a fault, I think, right? Like there's this interesting thing about premium cards in that if everyone has them, it degrades the experience in terms of not only the exclusivity factor, but also some of the actual features. Like if you go on and you listen to people talk about cards now, on the internet, like everyone's like, there's too many people in the lounge. Like this is a real problem. It's funny. Like I was an SFO last month and I'm like, I don't even try anymore. I'm like, I'll just go buy a drink at the bar because there's a line out the door and a waiting list and whatever. And so there's a funny thing where I actually kind of think a good analogy here is like with Disneyland, right? Like people love Disneyland and people want to go to Disneyland and Disneyland keeps getting more expensive. Everyone's like, this is so terrible. And I'm like, but apparently the pricing is highly inelastic. Like people can just, they can just keep raising the price of going to Disneyland. People are like, yeah, I'll just keep going. I'll just take my money, right? So, so I think there's a little bit of that. And well, the price increase is quite high that Chase is rolling out.
What is the price increase?
So they're going from it started at 450.
Yeah.
And then it's been in the 500s and now it's going up to, I'm probably getting this wrong. I think it's like 695 now. 795. Sorry, I looked. Okay. 795. Okay. So it started at 450 and went all the way up now to 795, which is, more than Amex Platinum is, although Amex has made it very clear that they're revamping their card and they're going to raise the fee very highly later this year. And you even have these other ones, like speaking of fintech, like there's Atlas Card, which is not to be confused with Atlas Financial, which is a different Atlas card that's for subprime. It's very confusing because they're opposite ends of the spectrum.
I believe come up with more names, please.
I know. I believe Atlas Card is like $1,000 a year, and it's like ultra premium. And people really love that. Like, I think there's nothing wrong. Like, there's always going to be bougie people. And I will admit, I have a Chase Sapphire Reserve. Although, as we've discussed, I have 30 cards. It's like a professional problem. I pay all the annual fees. But, I think what's interesting is like Chase is very smart. They're not going to lose money on their products. They're looking at how these users behave, what the sensitivities are, how they can build in benefits. So, when the product feels too rich, it probably is, and that means Chase is going to have to dial it back. Like fundamentally, there's a market for interchange, which the network set, and there's a market for APRs. And so like there's sort of a limited scope of revenue ever available to anyone's credit card. Like,
and the levers are not totally in your control, right? Yeah, totally. Like I mean, the thing about interest rates is you can't. It's prescribed by the government. You can't go over a certain rate. There's limits on how much you can change the rate and how quickly. And then to your point about interchange, like it's the networks, it's not the banks that set that. And so you have these levers that you can pull, but you can't really pull them beyond a certain point. And within that world, you have to figure out a model that works, right?
Absolutely. And so how do they afford, 3x on dining? Like it has to come from somewhere. There are some really interesting factors underneath that I think people don't realize, like as we have all, as an industry, gotten better at fraud management, that feeds into the P&L. So if Chase is reducing their fraud by 10 bips, they can choose to take that or they can choose to put it in rewards. So there are these other pockets in the total P&L that affect the payout. But I think what we're seeing is, many products are subscriptions now, and a credit card with an annual fee is a form of a subscription product. What can we build into that product? And I actually think it's really interesting. There's a lot of this talk about coupon book cards, right? Like all the benefits and can you use them? And like, I don't know, Alex, if you're you probably don't live near any of the things that like the Chase Sapphire Reserve gives you discounts at.
Not a lot.
Right?
Not a lot. Yeah, no. But like all these great restaurants and stuff. Right. Yeah. So, okay.
And then there's also like, you see this in other industries. Like I think a lot about like T-Mobile has this whole discount program where a bunch of stuff's included, which I think is a really interesting model, Apple TV or Netflix or whatever. And so I think it makes sense for banks who are a very important part of your everyday life to say, if you want to go all in with us, we're going to make this super worth your while. And I absolutely expect a bunch of people to drop their Chase Sapphire Reserves and that actually be a huge net positive for Chase. Like, I think people are like, oh, this is so dumb of Chase. Like, it's too expensive. I'm going to downgrade. I'm like, they're fine with you downgrading. They want the people who don't
Right.
want to downgrade and who
Right.
are like, yeah, I know how to use the credits for the edit and dining and all this other stuff to make sense for me. I can very easily sit down and do the math and be like, I'm going to come out ahead. Right. Like,
Oh, yeah.
and so I'll keep the card and it's fine.
Yeah. Well, I mean, so you touched on a bunch of points there that are interesting, right? One of them that I want to double click into just for a second is this idea that, I mean, obviously Chase is really smart, right? And I always caution any fintech company that's like, yeah, I think what we're going to do is get in and we're going to compete with Chase and Amex in the premium card space. I'm like, be careful, because like they're smart about this. They know exactly what they're doing.
Absolutely.
They're not going to sign up for a bad deal. They're not going to lose money on these things. Like, they know what they're doing here. And it's really ultra competitive, as you sort of indicated with Amex sort of announcing. I think they sort of announced something without announcing it, but they're like, we're doing stuff too. Just, stay
Yeah,
posted.
it's like a preemptive.
Right. Kind of maybe a little rushed by the JP Morgan Chase news, I think.
Yes.
And so they kind of keep going back and forth with each other. They hire teams from one place to the others, like these people who know how to do this move around a little bit. But I think the thing you touched on with the Disneyland analogy, that I go to Disneyland fairly frequently, so that's one that is sort of near and dear to my heart. There is this kind of push and pull between, you want to have a lot of cardholders signed up for a service. And to a degree, the more people that you have in your portfolio, the more customers you have in your portfolio, the more you can spread certain fixed costs across that portfolio. So there is sort of a balance between how many people are in versus kind of the pricing and like what that does to the elasticity of demand. But the thing that people don't appreciate about cards is the third thing you talked about, which is a lot of the benefits don't scale the same way, right? Like, not all benefits to card programs are scalable or benefit from economies of scale. Some are actually anti-scale perks or businesses, like airport lounges. And a lot of the benefit of these cards is exclusivity. And I mean, you worked at Bankrate, so you understand this dynamic really well. But like, what Chase wants, kind of, and maybe this is a question I'll bounce back to you. Like, who is Chase's perfect Sapphire customer, right? Because people write about this idea a lot, where there are people who maximize points in a very sort of ruthless manner. And if the deal isn't good enough for those people, they will drop the card immediately and go use something else. And they tend to be fairly mercenary about it. But then there are people who I would classify as more like aspiring points maximizers, but they're a little lazy or sort of imperfect in the way that they do it. And those ones, I think, tend to be even more profitable for the Chases and Amexes of the world. So I guess a question I would put back to you is, how do you sort of think about the different segments of users for premium cards, and like striking the right balance between sort of getting a good review from the points guy, or paying for a good review from the points guy, while also like kind of keeping the benefits exclusive enough so that people don't complain about it? Like, where's the ideal balance point there?
Yeah, I talk to folks about this idea a lot, which is, who is your customer? And this will also come up, if we talk about some other cards in a moment. But
Yeah.
Chase has such a big platform. Like, they're the number one issuer far and away. They're doing like well over $1 trillion in purchase volume a year, which is astounding, right? And they have a huge lead on number two, number three, even with Capital One buying Discover and everything. So they can afford to do a lot of interesting stuff at that scale. I think that the ideal customer is started with the mass affluent, but now I think it's pushing more into the more affluent. And as the socioeconomic structure of the country continues to get more bifurcated, you're going to see more and more of this structure where, if you're making as a family $400,000 a year, like, that's fine if your card's $795.
Sure.
Like, it's just whatever, and you want all these other benefits. What Chase, I think, wants you to do is use the card, not exclusively efficiently, right? Like, I mean, they know you're going to use the 3X category or whatever, but they hope you also use the 1X category, and that you're going to buy other Chase products, right? Like, that you're going to get a mortgage or a checking account, or, put your wealth there, right? Like, a lot of this for the banks is the kind of multi-product thing. I mean, this is not Wells
The
Fargo
sort of
and the
halo.
fake.
Yeah.
It's not, you don't want the fake account problem, right?
No. Yeah.
But I think, you see a lot of that, and you don't actually want the super points maximizers. They're not good customers.
Yeah.
Also, I think a thing that, and maybe this is a little less true now, there are better tools and people are savvier, but like when I was doing Wallaby and we were trying to help people optimize this stuff and we looked at people's data, like they're not as good at it as they think they are. And so there's always a little stuff around it, just like maybe you're really, really careful. But the way this works, like, and I just, use the example even in my own household, right? Like obviously care way more than my spouse because like this is what I do for a living. And
Yeah.
we use the Chase Sapphire for dining, and therefore it's a top of wallet card because that's a thing you buy very frequently. And
Yeah.
so, of course, sometimes either of us are going to pull it out because it's just literally in the top of our wallet or, the default card in Apple Pay, and we're going to do some 1x purchases. And that's fine. And Chase needs some of that. If everyone ultra optimizes, the product won't survive.
Right. Yeah, I mean, it's kind of one of those things where it's like if one or two people ultra optimize and then the points guy can write a glowing profile of the life they're living, that acts as like an advertisement for people to get the card, but you don't actually want everyone succeeding at winning the game to that degree. Otherwise, the economics sort of break down. It's funny, I do this professionally for a living too, so occasionally I'll find like little things I'm doing with fintech products, and my wife will use the product, and I'll be like, "No, don't swipe it for that." And she's like, "Would you shut the fuck up? Like, I don't want to hear you talking about how I should be using this product."
Yeah.
So there is a certain amount of like leakage and like just more sort of general use of these products. Let me ask you this before we move off this topic. To what degree does Chase tie Sapphire Preferred to its other products in terms of like, hey, you get a better rate on your mortgage, or hey, we'll waive this fee for this premium checking account? Do they do any of that, or is it more just the brand halo of I already have this Chase card, I might as well get other Chase products?
So I haven't seen them do this currently. They used to have like some, 10% bonuses here and there for multiple products. I think it's a missed opportunity, but maybe they don't need it. Like Bank of America is really big in this space, where if you keep your assets at like Merrill Lynch, then you get bonuses on your credit card rewards and things. So I think other banks are doing a better job in that front, but I think it's more of the brand halo at Chase, and maybe that's enough for them, right? Because they're getting you, like credit cards. So I think the funny thing about financial service product, we know it's really hard to get people to switch checking. It's your primary operating account.
Right.
We know you only get a mortgage or a car or whatever relatively infrequently. So even though credit cards are not something you buy every day and you don't have a ton of them if you're a normal person, they are typically the financial product that people have the most of and acquire the most frequently. People get a new card every 18 to 24 months or so. You do not get a new checking account that fast. You do not get a mortgage that fast. And so it serves as an entry point to a new financial institution. And if they can capture you there, even if they're not giving you benefits, they can cross-sell you, they can email you, they know what you like to spend money on, all this other stuff. So it makes sense to kind of invest in not just cardholder acquisition, but like future total user acquisition that way.
Yeah, no, I've heard that too, and even on the commercial side, I've heard some of the big banks talk about like corporate cards that way, right? Where it's like, look, we don't really care about the corporate card business, to be honest with you. Like we do treasury management, we do corporate banking, we do commercial lending. Like that's where we make our money. But what they'll tell you is we do the corporate card because we want the employees at the company taking our card out and seeing our logo on the card when they pay for a business dinner, right? Like we want that tangible connection to our brand, even though the vast majority of our business is boring back office, heavily bespoke financial stuff that doesn't really touch the card and where we make a lot more money. The card is still a touch point to the brand that's important. And I feel like that applies in the premium card space as well.
I agree. It's funny, as a quick aside on the thing you mentioned, I actually did a project with a community bank last year where I made the point that like they didn't have very strong card products. I'm like, well, we don't care because we make our money lending. And I'm like, okay, but the problem is a bunch of awesome fintechs are making these amazing, purchasing fleet, whatever cards. If you think that's all they're ever going to do, you're fooling yourself because they're going to steal loans from you that way. So I think it's an interesting challenge for bankers as well to think about, like, what are the competitive pressures in the market? I have to be able to provide the service my customers need.
Yeah, no, I think that's exactly right. So I think that'll be an interesting area to continue to watch. Obviously, as you said, American Express, they're like, no, we're going to do stuff here too. Just wait. I kind of get the sense, and they hinted at this, that like prices are going to go up.
Oh, yeah.
It feels to me like your sort of general point about that's a good idea.
What the new platinum fee will be?
Let us bet, and then that way you can come back on when they announce it, and we can settle this wager. So what is it right now? Give me that.
I believe it's $650. It might be $695. You'd think I would know these things about my own cards. It's kind of embarrassing.
Well, I mean, you have 30 of them, so it's not. Yeah. I guess I'm not totally.
I think it's $650 and $150 per additional user.
Got it. Okay, let's just stipulate that that's what it is. Okay.
Okay, I think they're going to go to $995.
$995?
Yeah, they're going to be like, Amex is the top of the pile. We're the best, and we want fewer people platinums. If you can't stomach it, go get a gold card. That's my guess.
Yeah, Chase Sapphire Preferred is for people who can't afford an Amex. Yeah, I mean, that's possible. And I do think your earlier point about Atlas, like, there are some fintech companies that are sort of challenging the upper bounds of this and even trying to outdo Amex on this. I'm not sure how successful they'll be, but like they are pushing the pricing in that direction. I'll take the under on that. I'll say more like an $8.95 type of range. I do think the strategy like of $199. It's not $2. It's $199. I think that applies in premium card annual fees too. So I'll take like $8.95, and when we know, we'll have you back on.
Perfect.
And either you're sending me a bottle of wine or I'm sending you a bottle of wine.
Sounds perfect. I love that.
All right, excellent. So another one I wanted to ask you about while I have you here, and you, I think, were subtly hinting at it since you've seen the outline, is Bilt, a company that I am fascinated by. I know you are fascinated by. A company that is also trying to kind of play a similar game here, trying to capture this young-ish, wealthy-ish, urban-ish demographic that everybody covets so much. As listeners probably know, their wedge product was a card, the Bilt card, that they would offer you, would give you rewards for paying your rent. Now, obviously, historically, rent was not something you could pay with your credit card. Property management companies wouldn't accept a credit card because of the interchange fees associated with it. Bilt, through some very clever negotiating and very effective negotiating early on, was able to create a card, the Bilt card, issued in partnership with Wells Fargo, that would allow users to pay their rent with that card. They sort of leveraged that into a broader set of relationships with property management companies. I think today they say they cover about 25% of apartments in the US and have relationships with 70% of the top 100 landlords in the country. Those relationships now allow for Bilt customers to use other forms of payment besides just the Bilt card to pay their rent and to participate in the Bilt loyalty ecosystem, which also includes restaurants and convenience stores and any number of other merchants with sort of a, I guess, intent to have them all be sort of local to wherever someone is living. So, you live in your apartment building, you pay your rent every month with a Bilt affiliated payment mechanism. You then go down to the Walgreens down the street, you shop, you use the same Bilt affiliated payment mechanism. Reward points for that purchase just automatically show up in your Bilt account. That's the general vibe of what they're trying to build across the entire country. They just raised, it was announced today, Matthew, we are so lucky to have breaking news on this show just a few hours ago, that they had raised $250 million in additional equity funding, valuing the company at $10.75 billion, making them, I suppose, a decacorn, if that's the right terminology still.
What a great word.
What a magnificent word. We keep inventing like words for rarer and rarer versions of unicorns, which are already supposed to be pretty rare. I
Yeah.
actually made a rhetorical point on this in my newsletter recently when I titled the newsletter "Bilt Isn't a Unicorn," and I'm happy to elaborate on what that means. But before I do, like, what's going on with Bilt? Like, what's been, I guess, historically your viewpoint on the company, and then maybe we can talk a little bit about what they announced as a part of this fundraising.
Yeah, I mean, Bilt is just super impressive. Obviously there's like challenges I think they have, but I think they are the
Yeah,
single most successful fintech card product launch ever. Maybe certainly on the
yeah,
credit side,
yeah.
and they make me feel like when the rest of us are all playing checkers, they're playing chess kind of deal. Like they're doing all these complex things. So you talked about
Yeah,
payment portals. Like part of the way in was the founders had worked in rental insurance before and had some background. They knew about property managers. Property managers, even if they were taking ACH, were obviously paying a fee for ACH. And Bilt was kind of like, well, if you accept our stuff and participate, well, what if we just cover your ACH costs for you? Because
totally.
like they're
Yeah,
only paying, that's not their business. Is not purely the payment processing, and maybe people will pay with their Bilt card, and maybe they'll pay with some other card, and they'll pay the 3% or whatever. So they got this massive foothold. They brought in those, customers and partners as investors onto their cap table. So they're building this whole consortium. And I think it's an extremely, insightful innovation that here's a huge expense for a huge number of people, right? Like a third of the country rents, and their largest expense is presumably their rent every month, and there's no access to points, and everything else is travel. So they're like, well, we're not travel, so it's white space, and they could build something about local points earnings, leveraging some of the other, like we already had, you could earn points at restaurants through dining for miles, but they really brought it all together. And I think to the idea of how cards can survive, they made the card too user friendly. That's been my contention, right? Like it's too easy to earn all the points. I think a lot of folks, if you read Reddit, are scamming Bilt out of Bilt loyalty points with various things.
sure.
There's like fake
Yeah,
rental payments, and you only have to do these 5 transactions. I don't see that lasting in like Bilt 2.0 that they've announced, that they're probably going to have like a
yeah,
higher threshold for earning points. And people will complain, but it's still a huge opportunity. And it spawned a bunch of other startups. You have other folks in the housing space like Mesa and M Card that are doing it in mortgage, which Bilt is now going after. And a big mortgage company is behind this round. So that'll be
yep,
interesting. You have
yep.
folks like Fasten who are doing this in like the auto loan space. So like there's a bunch of people thinking about points for other large expenses. And I think it's just a super fascinating company. And anyone who's ever come to me and said, my wedge product is a credit card, I've said, that's a terrible idea. Credit cards are so hard. What a bad wedge. But like here I'm proven wrong. Like what an amazing wedge for what they're building.
No, you're right. And the reason I said Bilt isn't a unicorn is I actually think they're much more rare than a unicorn, right? I mean, a lot of times we'll talk about these companies as like, oh, this is a playbook for others to follow. I just
Yeah.
don't think that's true with Bilt, right? Because, I mean, the ecosystem that they've built with these retail partners and with property management companies and now with mortgage servicers, which we'll talk about in a second, all of these companies are sort of drawn to this ecosystem because they've pulled a bunch of these consumers that all of them want to like interact with and transact with onto their platform. And a lot of it dates back to like very early good decisions and like good relationships that Bilt and Bilt's executives had, right? I mean, the card that I referenced before that they initially launched with, that Wells Fargo card, not a winner for Wells Fargo, right? It's been reported in the Wall Street Journal and elsewhere, and I know you've actually been quoted in some recent articles kind of talking about it as well. It's not profitable for Wells as a standalone product, right? I think what was reported by the Wall Street Journal, were losing something like $10 million a month
That's what they
on this
said.
card, just based on the volume. And who knows if that's true, but that was what was reported. And again, to your point about people sort of over optimizing their use of the Bilt card, it's not hard to see that that could have happened, but it's critical to Bilt's success, right? Because how do you get property management companies in the early days before you have a platform to accept a credit card and like eat those interchange fees. They're not going to eat those interchange fees. Well, what
No.
if we convince Wells Fargo to eat those interchange fees? Well, then you might be able to get the property management companies on board. Okay, well, now that we have the property management companies on board, can we convince them to accept other forms of payment that we can process on their behalf? Yes, we can. Okay, now that we're doing that and we have this kind of digital wallet set up, can we tie that digital wallet to other merchants that are in this same ecosystem as the property management company? Yes, we can. Can we figure out a way to do attribution on those cards, linking them behind the scenes so that we can get paid an extra thing on top of the interchange when we drive, transactions to these merchants? Yes, we can do that. And so it's like every step along the way has, I think, been a really clever expansion of that initial kind of very fortunate deal that they kind of built with Wells Fargo, where, again, as you referenced, Wells Fargo's on their cap table. So they had like an invested interest in trying to make this Bilt partnership work. Two things about this that are interesting to me. One is we talked about mortgage. United Wholesale Mortgage is an investor in this new round. They're obviously one of the largest, if not the largest, one of the largest mortgage originators in the country. It's them and Rocket. And actually, Matt Ishbia and Dan Gilbert, if you're an NBA fan, they both also own NBA teams and they fucking hate each other. Like Dan and
this is an amazing
Matt are
story.
Like, it's the best, right? Yeah, because I think if I'm remembering right, like they both went to college in Michigan. They were both like basketball players on their college
one, like,
basketball
Michigan
teams.
State, one University of Michigan, right? I think it's the whole lifetime rivalry.
And then they founded these two companies, and now they're the two biggest mortgage companies. Anyway, they hate each other. And so United Wholesale Mortgage, I mean, probably part of the pitch to them was like, hey, do this and you can screw over Rocket. They came in as an investor in this latest round, and they are going to be partnering with Bilt on, I guess, some kind of like loyalty and points sort of layered on experience on top of their mortgage servicing business. And so if you're paying your mortgage to United Wholesale Mortgage, that'll, I guess, come with points. I'm not exactly sure what that's going to look like, but it's clearly going to get tied into this ecosystem in a way that should be pretty interesting to watch. It's also kind of ironic, just as a side note, because Bilt's initial idea before they got into points and rewards for renters was to actually help renters go from renting to being homeowners and making that transition from one to the other. And now it seems as if they're sort of trying to build like these parallel loyalty ecosystems for renters and for homeowners, but not necessarily crossing over between the two. So anyway, I'll be fascinated to see how all of that kind of evolves. And then on top of that, they also announced that they are going to be launching, you referenced it, kind of the Bilt Card 2.0, I believe coming up at the beginning of the year in 2026. That will coincide with them moving off of Wells Fargo. So the Wells Fargo partnership, put in quotes, is ending next year. Possibly a mutual decision, I'm not sure. And they'll be moving on to a new set of different card products. So Matthew, take that wherever you want, but it seems like they're making moves in all kinds of interesting directions.
Yeah, I mean, so much there. And I think it was a natural evolution for them to get into something around mortgage because they said like 2/3 of the country owns their home, right, of adults. So like that's a huge audience. We've seen, again, some of the inklings of this with folks like Mesa who have a mortgage focused credit card in market today where you can earn points on your mortgage and you can earn a bunch of points if you get your mortgage through Mesa. And I think that's a really interesting angle. And I've worked on a couple projects over the last few years as everyone said, like, what should we do about Bilt? Basically, like in the mortgage space where mortgage commissions are really, really large. So you can do some interesting stuff with, I'll dump a bunch of points on you when you get a mortgage, or I'll take some of that $5,000 I get for originating it and give it to you over time. Rocket has had a credit card, which actually they inherited when they bought Truebill. It was a Truebill credit card built on Deserve. And as I think we all know, like Deserve is no more. So I don't know what the future of the Rocket card is. Rocket is making huge moves. They just bought Redfin, I learned when I opened my Redfin app. So, they're all taking over the world. What I think is amazing about Bilt is for years, people in the United States have tried to build what they call a multi-merchant loyalty platform and just failed. Like we have these in other countries, like they have, Aeroplan in Canada, and, they have a lot of these in Asian countries. And like Amex tried this 10, 15 years ago. It was called Plenty. There was a Plenty credit card and had
I
like Rite Aid in
remember.
it and stuff.
Yeah.
Didn't go anywhere. But now you've got this Bilt program where it's like on your rent, on your local restaurants, at Walgreens. And that's where people are spending their daily lives. And it really is this multi-merchant program that kind of like, it's one of those classic two-sided type problems. They seem to have been able to actually, solve the cold start. So I think it's very logical to extend it. It's really interesting that they're moving off Wells to cardless, which is a fintech issuing platform that I think is on a tear. They also, cardless just announced they're going to be powering Coinbase's new credit card. They've done some other like smaller airlines and things in the past. And typically people in fintech want to go the other way. They're like, well, I started with, insert fintech platform here, but what I really want is a big bank to do this because the banks have cheaper access to capital. That means there's more profitability in the whole program. So like the future of what the specific card features of Bilt 2.0 look like are unclear. They're going to add an annual fee card, they've indicated, more premium things. But given the success they've had, and as you put it, like the way they made these smart decisions along the way to string this together, I can only imagine they've got really big plans that are going to be really meaningful for a lot of consumers as a new way to kind of activate loyalty and rewards across their daily life, and not just on flights that you might take once or twice a year.
Yeah, no, well, I mean, and it is interesting because it does actually kind of tie back to our last story on Chase Sapphire Preferred. I mean, as Chase Sapphire Preferred and Amex and those guys kind of move up market and try to get to like kind of go from mass affluent to just like affluent, and sort of as the stratification of different income levels continues in the US, it does feel like there's going to be a gap left behind for kind of that mass affluent, right? So like, the tier below, it's like, hey, I don't make, $600,000 a year as a household. Like I don't really want to pay, $800 for an annual fee for a card that I can't use everywhere. But I would pay, what were some of the numbers for their, the annual fees? Like I think the highest one was like $495, right? So it's kind of right where Chase Sapphire Preferred used to be for the mass affluent. That's the annual fee for the highest level Bilt card that's going to get launched. Like that feels like a mass affluent card, and maybe that's the one that really gives you lots of points back on your rent, and maybe the no fee card allows you to pay your rent, but you don't really get as many rewards back. Like I'm sure they'll figure out a way to kind of rejigger the points to make the math work. But again, the benefit they have is they've built this two-sided network. They have a lot of, very passionate customers, right? I mean, like for all of the people on Reddit who are sort of ripping them off right now, they also have lots of like genuine users who really like the platform. And I think the last point I would just make about Bilt is, all of this is being driven by the CEO, who has a really good network for reaching into all these places to build this type of network, right? Like he can call up the CEOs of these airlines or of Walgreens or, of these restaurant groups. Like he can get these deals done. And a lot of times I think in assembling this type of network, it's as much about relationships as it is about anything else. So that seems to be what's powering a lot of this.
I think the thing about Bilt that's such a huge part of this, it's just such a no-brainer for every consumer today. Like if you qualify and you rent, this is 2,000 or 3,000 points a month you weren't getting, and even if they're not your favorite airline mile or whatever, like it's still gravy, right? It's still like a win-win. And I think that's very insightful for anyone building consumer fintech, is to think about how to make things really obvious, because I think sometimes we try to make things a little too clever, and it's not obvious enough to everyday users. But like what everyone has told me who has Bilt cards, is like, I moved into a building that had it, and everyone I met was like, did you get Bilt yet? Like just like built-in referral and virality, because there's, again, as long as you qualify, there's no reason not to get it right now.
Yeah, the best products are the ones where it's just a no-brainer, and people kind of look at you weird if you don't have it. And I do think for these little sort of geographically defined ecosystems within the larger Bilt ecosystem. You move into an apartment, you're setting up your rent payments, then you go down to the coffee shop that's down at the bottom of the building, and everyone there you see pulling out their Bilt card and using their Bilt card. Like, it's going to be so self-reinforcing. And it is interesting because it does sort of rhyme a little bit with the way that community banking used to work a million years ago, where this same vibe existed, except it was your community bank, debit card, or, even like checks you were writing from your community bank. Like, they sort of sat at the center of these local payment transaction ecosystems, and increasingly companies like Bilt are instead. So it's a pretty interesting transition. Matthew, before I let you go, one more topic, and I'm just going to sort of audible here because I had a bunch more things I wanted to talk to you about. But as I expected, we took a lot of time on those first two stories. Third one I want to ask you about is crypto coming to cards.
Amazing.
And you referenced Coinbase, which is working with Cardless to launch a new card. That is, as is the case with a lot of cardless cards, an American Express card offering reportedly up to 4% in Bitcoin back as rewards on transactions, up to 4%, depending on some specific conditions. And this is not the only one of these cards. Obviously, there's quite a few other kind of crypto-y card products, Coinbase being kind of the 800-pound gorilla in this space. They're sort of the ones who set the standard for this, I would say, probably along with Robinhood, that's a little less crypto exclusive, but sort of plays in the same kind of like premium investor, young customers sort of model. There's a few things here with this Coinbase card that I wanted to ask you about. The first one is, how attractive do you think getting crypto back directly as rewards is relative to other types? Because when I think about the structure of like rewards and reward programs, we've kind of been stuck on like points, miles, cash back for a long time. Like that has sort of almost solidified as like a pretty consistent standard. Crypto is the only real thing that I've seen break in as a different redemption mechanism. And obviously it's beneficial to Coinbase in other ways, but what do you think about that as a consumer value proposition?
I mean, I think if you love crypto, you love a crypto card. Like when BlockFi launched their card before Bilt, that was what I always said, like, this is the most successful fintech credit card ever, was BlockFi. I believe they were doing like $2 billion a year before they got taken down by FTX, which is no fault of BlockFi's nor the BlockFi credit card. And I think it's very clever because there are some advantages, as far as I understand, and I am not a crypto exchange expert, like in terms of crypto exchanges offering their own, helping people like hold it on platform, and then maybe they trade later and there's a fee, and so they earn something down the road or whatever, right? Like it's maybe has some cost advantages. But you could, like, I don't know, get a Citi double cash card and just remember to invest your 2% in crypto. But like, are you really going to? You're going to pay some fee or whatever. I think that the pitch here is it's 4% today or 2% or whatever it is, depending on the card you have, it's going to be worth more in the future, right? If you believe in crypto, especially in Bitcoin, and you believe like it's going to consistently be up and to the right, and it's like, I don't know what, 114,000 today, it's wild. Then you're like, this is an investment in the future. I actually think these owe something to the good old classic Fidelity Visa, which was 2% back when deposited into your Fidelity account, auto invested, which a lot of like savvy investors did. Because it's like, yeah, it's 2% today, but I'm investing this. And that's the same way everyone feels about crypto. And so I think it's very attractive if you like Bitcoin. Like if you are not a crypto person, you're just not going to think about these cards.
Right. Well, and it's a good point, right? Because it's like, if you're not a crypto person, what the hell are you even considering a Coinbase card for in the first place? Whereas if you are a crypto person, probably already use Coinbase, and this is just a way to sort of solidify your commitment to the crypto ecosystem and that belief. And I do think it is a good point about the value of points, right? Because you see this come up with airlines and with others. Like there is a real concern around the devaluation of points,
yes,
right? And like the sort of point inflation, like that kind of stuff does happen. And so the idea of automatically converting your points into a investment that you personally like, and it could be crypto, it could be investments. I've seen, I think like SoFi has kind of a clever ecosystem where they tie these things together, and you can get more rewards if you put it towards like paying down your student loans or like a mortgage or whatever. So like I like that as a general framing, and obviously Coinbase's customers are crypto folks, and so they tend to believe in that as the mechanism for things to go up. I will admit, and I know cardless is sort of at the centerpiece of this, but I find the tie-up between Coinbase and Amex kind of fascinating. For a couple of reasons. I mean, obviously, Amex, I think I might have been Simon Taylor who was like, crypto is the new rich. And so, of course, Amex wants to be involved in crypto. I think there's probably some truth to that, maybe a little overblown. But I also think Amex has kind of tacked out a very interesting strategy, given that they're both an issuer and a network, and some of the partnerships they have with fintech companies. Were you surprised that this was enabled through cardless and is being brought to life on the American Express network?
I wouldn't necessarily say surprised. I mean, a little bit in the sense that Amex is the number 3 network, but I do know, working in the space, like the Amex network is trying to grow. You see more and more cards on the Amex network. Like anyone can see that from the outside, right? And
yeah.
I think if you were to talk to people at Amex, they would say like the network and the card issuing business, like they're not the same department, right? Like they do different things. It is a different construct. You had the same thing with Discover. There are just very few Discover network cards, and I'm super curious. On some other podcasts, we'll see what Capital One does with the Discover network. But
we'll have you back for that one, yeah.
Yeah, but I think Amex has a super premium brand. We know that there is higher interchange coming off of it typically, like just mathematically. And so if you want to go that premium route, I think it makes a lot of sense. And it's a differentiator. And Coinbase likes to be different. They do have that kind of more high-end, appeal, I think, in a lot of ways. It is. So again, it's like, if you just guessed, you probably wouldn't guess Amex, but kind of looking at industry trends, I think it's not surprising to see more and more Amex cards. I think we're going to continue to see more and more Amex cards. And I think fintech should consider Amex. Like the old school acceptance stuff is not true in the US. The overlap is like 99.9% at this point. There are these exceptions like Costco or whatever. And, maybe if you're building a travel card and you have concerns about Amex acceptance abroad, that would be one thing. But in the US, just as many places accept all 4 networks as anyone else today. That wasn't true 20 years ago. It's absolutely true today. So I think it's very, very smart. And I think I think Coinbase makes amazing products. I've always been very impressed with them. Like they're very, kind of Silicon Valley product centric. So I expect this to be a really great card. And if you love crypto and you're a paid member, right? Like I think that 4% is only if you're on like Coinbase One or whatever. It makes a ton of sense. Like if you wanted a Bitcoin card, you could have gotten Gemini a couple of years ago,
right.
But maybe you just don't use the Gemini exchange. Like we're going to go from there being one crypto card to there being like 4 or 5, right? There's a crypto.com one got announced. There's a Fold one got announced. Coinbase got announced. So they're not all in the market. But they're coming in. And I love your point about Robinhood, which I don't think of them as a crypto company, but I guess maybe they are. And like, I'm still on the wait list. Who on this podcast works at Robinhood and can get me a gold card? I'm waiting.
I'm shocked they haven't already gotten you one, man.
I don't know. I've been on the wait list. I haven't referred enough people. That's my problem, I guess. I've only referred a couple. I'm paying my $5 a month, just hoping. But I want the gold one for my collection. I'll just be really just upfront about that. But I think that it's an everyday product. These companies are expanding from being single. Like I do this one thing. I just do investing. I just do crypto. To we want to be your financial partner, right? We want to have Coinbase has a debit card. Now they've got a credit card. They've got trading, right? They're becoming a whole financial partner and really competing with traditional finance. And that in and of itself is a super fascinating trend, right? Robinhood isn't just a cool stock trading app. It's debit and credit. And I bet they'll do lending and eventually mortgage. And they'll be just head on with Chase eventually.
I'm sure that is. I mean, they talk about that, right? Even going back to their S1 when they went public, that's what they want to build is the on-chain equivalent to these financial services superpowers. So I think that's the vision. If anyone from Robinhood is listening, get Matthew off the wait list and get him this gold card. I do think the Robinhood comparison is also apt in that you mentioned before this idea that like annual fees are a subscription fee. That's 100% true, right? Like an annual fee is a subscription fee. I do find it interesting that both Robinhood and Coinbase have kind of moved in the direction of offering more of a monthly subscription fee rather than an annual subscription fee, which I think kind of speaks to this idea that Robinhood and Coinbase, I think, are not optimizing for the sort of travel voucher like breakage model that old card issuers used to do. Like the other model used to be like an annual fee, you pay it once a year, we hope you don't notice, and most of the benefits that you think you're getting for this are actually not benefits that you can really redeem conveniently. And so there's a lot of breakage built into it, and we just kind of collect a pretty good amount of money for the annual fee we're charging. We sort of hope you don't cancel. This new model that's emerging with Coinbase One and with Robinhood Gold, it seems much more of like an active subscription model, which is a little different than the classic annual fee, which is like, hey, every month we want you to pay $5 or $20, or I think the more premium Coinbase One is like really expensive, like really, really expensive.
Yeah, well, they have this like product for traders, which is hundreds of dollars a month, but those are for people that are doing day trading crypto. I think that's what that's for.
Right. Which I guess is its own version of like a super affluent segment that I don't understand. But I do think that like the more monthly, not just card benefits, but like ecosystem benefits, and the card is just one thing that's tied into it, that does seem to be sort of a slightly different model than what we've seen in the premium card space historically.
It is. I think there's a bunch of ways of looking at this. Like, we're going to make money off you. Like, one way you can look at, like, there's the Costco model of we don't make money on the individual units, but we make money on the annual fee. Then, as you said, there's been kind of traditional cards, which is like the annual fee helps us make money because there's all these benefits. And then this is a little bit like Robinhood Gold. They're paying you 3% cash back. They're losing money on every swipe. There's like no way around it. So they have to believe that they're making money on you having the membership, but not just that, but like using Robinhood and trading Robinhood and all these other products. Like it is, you asked earlier about like, does Chase give you benefits for having multiple products? Here, that's actually built in. They're saying like the card is a huge benefit if you're all bought into our system. And so
the card, it's like a skeleton key that unlocks the entire ecosystem for you. Whereas Chase is like, get a Chase card. And if you want to talk to us about a mortgage, that's cool too. But like very different than how Robinhood looks at it. So
I think that's a really interesting model. And I think it, it's the ultra fan model, right? Like, again, like people, I think Robinhood's very divisive. Some people think it's like ruining America because meme stocks or something, and other people are like, this is the easiest way to build wealth and I love it. And so they're building products for their ultra fans, and I think it's a really smart move.
Yeah, no, I agree. I mean, I personally, on a philosophical level, probably fall more on the critic side on the Robinhood scale, but I will say, just setting that aside, they're great at building products, right? I mean, they're clearly amazing at building products. They have that sort of same high gloss design feel that Coinbase has, which you mentioned Costco. It's kind of the opposite of Costco, and probably why Costco and American Express are no longer partners, right? Like they're philosophically are very different, but this high gloss, like we want to be the sort of central provider for these kind of wealthy super fans. That's a model that Amex, perfected decades ago. And it's a model that Coinbase and Robinhood and others are going after. So I can't wait to see how it plays out. Matthew, this was fun. I really enjoyed it. We have to have you back on because we made a wager. So we'll have to see how that plays out. And I look forward to that. Thank you for your time, sir.
Thank you, Alex. Great to be on.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.